Welcome, 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 everyone. Hello there. We are back in motion. Today's class is going to be, we're going to learn a simple trading strategy. Let's say that three times fast. We're going to learn a simple trading strategy using, market structure as our guide. If you guys are able to see me, able to hear me, drop some sevens in the chats just so I know the connection is good. Good morning, smart girls and guys trade. Oh, I like that. Awesome, awesome. Sorry about the little hiccup. I don't know what happened this morning, but I was talking to myself at least for like 5 minutes. So I guess you guys missed that. Oh, hey, Bridget. Awesome, awesome. Hey, Vic. Perfect. Okay, so we're good. We're in motion. You guys like the channel. Throw some hearts for me. Make sure, so I know we are nice and engaged. All right, perfect. Perfect, perfect, perfect. Okay, so let's go ahead and pull up our charts here. What do you guys want to take a look at? So today, you guys, if you ever felt, confident in your analysis, but you're still hesitant to like pull the trigger into the market with those trades, this class will definitely change that. So it's going to be a quick 45 minutes class. We're just going to get into a breakdown of, my strategy, which is really okay. Are y'all ready? Thanks, Bridget. Okay, awesome. I can definitely do that. It's my idea. I'm not, an idea for other people, but this is when I do call it like a trade idea, it is just simply, what I'm looking for in the market in those areas. But, analysis sounds good too. Awesome. Okay, so my trade basically, my strategy is one of the first strategies I've ever learned, kind of based on that before IM Academy. It's just an EMA cross. So the first strategy I ever learned, we were actually using Heikenaishi candles, and I think it was like a 5-10 cross or something like that. I did that for a little bit, end up going to IM Academy, getting some more knowledge, end up teaching with, another instructor there. And they taught, some other elements of that strategy, how we can still use market structure to enter and exit the market. So, taken all of that information, done a bunch of courses over the years. And so, basically, in addition to, my 10-20 cross, I use a couple different indicators in the market that help me to identify market structure, stay on the right side of the market. Simple as that. Okay, guys, let's go ahead and start with a simple. I'm going to teach you guys from a blank chart. We're going to see, go over what indicators are used, why we use them, how to set them up, how, and how we would enter and exit trades if we have any setups so that we can trade with execution and structure and clarity. Okay, what asset do you guys want to look at? We can look at anything. You know that I love to trade the futures markets now, so I'm not really too much in forex. However, this strategy you can use, with any pair, any asset. So, what say you guys? We can look at NAS, we can look at gold. What do you guys have a taste for this morning? Gold, Vic says gold. Okay, so gold it is. Now, if you're trading Forex, of course, you would trade XAU USD. You would come over here, add your symbol, and you can pick, whatever pair or whatever broker you're using for XAU USD. So right now this chart is you can choose forex.com, Pepperstone, whatever kind of aligns, and choosing, the right broker helps that, you see the correct price here so that you're trading, in your account, you're seeing the same correlating price as on your chart. Perfect. Kelly made it. You guys, I was getting so frustrated. I was like, what the heck is going on? So if you want to trade a gold forex pairs, you can do that. If you're trading gold with the futures here, that's a GC. So just because I would like for us to take a trade in our Top Step practice account here, we'll go ahead and pick GC1 for our gold chart here. Will everyone have gold picked out or set up here? Throw some, I don't know, y'all, ones in the chat. I just want to make sure that I don't lose you guys. I want to make sure we're all on the same page. So let's start with our indicators. So the main the main indicator that I use here are my EMA crosses. So let's go up here to our indicators. Let's look up MA cross. You can use EMA cross. You have a bunch of different options there. Whatever you've used in the past, or, definitely I just use the standard one here from TradingView, MA cross. All right, now you can go to your indicators here and hit the little pinwheel for our settings. For me, my short EMA, I use that with a teal color. Long EMA, I'm using with a yellow color. And then my crosses are black. You guys are able to use whatever colors stand out for you. So a 10 EMA here and a 20. I've used the 9 and the 20, the 10 and 21. So it all just depends. Some people even just use a 50 EMA crossing, the 200. I like these, the 10 and the 20, because they help to identify short-term trend, which really aligns with the type of trader that I am, just being a day trader and in the market. So that's the main indicator here. And so basically on a shorter time frame, this is a 4-hour time frame. So I use the 15-minute. I'll show you guys how to take a look at, looking at different time frames to see which time frame works best with your pair. Sometimes you may not be seeing like very clear crosses, or, not a big trend here. So for instance, if we were in the market at this point, and we were coming off of, a buy trend here, we got a cross making us think that we were now going to go into a sell. Then we got another cross here to go into a buy. And then we got another cross, to go into the sell. If we were in, the market at this point with something, with these conflicting crosses on the 15-minute time frame, then that would just be, an indication to go to, the lower time frames or even the higher time frames, just to check your other time frames for clarity, to help you identify what side of the market you should still be on. Should you still be in that buy? Should you have closed it? And things of that sort. So this is where market structure comes in. So this is why just our 1020, my 1020 cross alone is not a good enough strategy. We have to use market structure to help us identify, when to get into those trades, when to get out. Like right now, if we were in something like this and we were in that buy and we got a cross and we were around right here in this area, 39.57, we would then use market structure. So we can come over here, identify kind of our support level, We can, check our latest high here. We look at our candlesticks and things of that sort. So, you guys following me with our crosses? How do we feel? Do we feel comfortable? Just the first element of the strategy is, again, when we have our 10 EMA crossing our 20, that gives us the signal for a buy, and we would stay in that trade or still be looking for buy opportunities when we are, the market is still get making higher highs, higher lows. We still have, our candlesticks above these EMAs, nice wide candles. Nice wide bands here. So within those crosses, you definitely always want to see a, how do you call it here? Some room in between those two lines there. So you want to see that helps you to, that just tells us that, the market is still buying. We still are in this trend. Once we start to see kind of our EMA lines here, MA lines kind of crunching a little bit closer together, that kind of tells us that we may be in an area of consolidation or ranging. So once we see a nice clear cross, we have our bands nice and spread out. That is really the place that we would like to get into the market, on the side of that, trend here. So also, our EMAs help us and our crosses help us to identify, they can function as support and resistance. So sometimes we see our EMAs trying to cross. In this example, we finally got a 10-20 cross for this buy here. We saw that price did make a higher high, with this nice engulfing candle. Price tried to come back and break below 39.79. This is where our candlesticks and market structure come into place. And we see that, price just tried to touch this 20 EMA. It worked as, support. Price kept on, buying, making higher highs. Market using this 10 EMA as, support here. We use these as entry. You can use them as entry, signals as well. So a bunch of just using your 10-20 cross or whatever cross, EMA cross that you use within that has a lot of information, but it's just not good enough, to use on its own, only because the market can do this, give us multiple crosses. So as soon as you see a cross, chances are that the market has already given us the opportunity to get into the trade. Okay, after we would have saw this engulfing candle, price making a higher high here at 39.60, and this was at 9:30 a.m. on October the 6th. By the time we would have seen this cross here, it would have been 10:30. So a new, whole hour later, and then we would have gotten this cross, at this candle when price was already at 39.71. So if you were a simple trader, you didn't like too much information, you could just set an alert for your crosses on the 15-minute and enter and exit the market on those crosses. So for instance, we would have gotten a cross here. Let's just say we would have picked out that alert. You would need to set, typically we do a 10-point for gold, 10-point target, which is 1,000 pips. So if we would have entered this level, entered at 39.74, at 39.84, we would have reached that TP. You could have used your, 10-point stop loss kind of right here, or just looking at market structure to show, okay, well, if price goes below, this wick here, I definitely don't want to be in the market. You could place it below your cross. So that's one way. You can just be in the market, grab your 10 points once you see that cross, and then the market will let you out. or you can just hold on to that trade until you get a signal for a sell. The thing that's tricky about that is because once you've gotten this sell signal, as we can see, the market would have went in 26 points into profit. You would have gotten a sell signal here at when price was at 29.87, which cooled 13 points. But we want to maximize our trades and get in and out of the market. We also have points where, we have conflicting crosses. So we have a cross, a sell cross signal here, buy cross signal here, sell cross signal here. So this is why, we're going to add on another layer of, indicators based in market structure. So all of the indicators that I use help, to identify the structure. We know that they're lagging just to help us stay in, the market. So for instance, if you were in this trade here, you would have gotten in at this point. If you would have just grabbed your 10 points, you would have been out. If you would have let it ride, you would have caught about 13 points. So far, you guys, what we've been learning about EMA crosses or MA crosses, would you guys have, if you were in this trade, would you have set a take profit target or would you have let it rock? Just with what you know about trading right now, what you know about gold, um, what you know about the market. How are you guys feeling? Are we setting a take profit or would you guys wait for a cross? Don't be shy, guys. There's no wrong answers. I'm just seeing how we would play this. So that was on the 15-minute time frame, and I'm just showing you why I like the 15-minute time frame, because look at, okay, so this line here, this vertical line is where we would have gotten this the cross on the 15-minute for the buy. As we can see, the 5-minute kind of gave us a cross a little bit earlier here, so we would have been able to get into the market at a better price. But as we can see within that, we had multiple different crosses, on the 5-minute time frame before we got that official, cross again on the 15 minutes. So the 15-minute just gave us two crosses here. The 5-minute gave us multiple crosses while still making, a higher highs before before it came back to kind of this support level. So that's why I like to use the 15-minute, just because it helps me to stay on trend a lot longer than the lower time frames. Let's look at the hourly. So I'm just showing you guys, it's completely up to you. I had to pick when I learned this with the Heikinashi candles, just learning, on my own there. I think I was taught, that strategy was on the hourly time frame. So you have to really just choose and pick, what time frame is best for your trading style and your trading type and your goals. Because if you are a person, that's only looking to get 5 or 10 points out of the market, maybe the 5-minute is good for you. You don't stay in your trades a lot longer, you're in and out. You would, if you get a conflicting cross, so let's just say you get a buy cross and then you get a sell cross, that's your indication, and you get a cross against the overall trend. Again, that's when we go to the higher time frames, the hourly, and maybe just stick with the trend, or just get back into the market when you see a cross for the trend, that the overall trend. So buy cross, we're only looking for broad crosses. If you see a sell cross, you disregard that and wait for the market to give you another entry for the buy cross. For swing traders, yep, this is where I learned on the 1 hour, because once we got this buy entry, I'm sorry, once we got this cross here for this buy, as you would have seen, this was at 38.79 on Friday, October 3rd at 4 a.m. And as we can see on the hourly, we just, this cross, this buy cross, price never, it touched, the 10, kind of using the 10 MA as support here, and just continued for hours and hours. Now we're on Monday, 9 a.m. We're still buying, and not until Tuesday at 6 a.m. did we get a cross on the 1 hour. And again, just a couple conflicting crosses, but price still making higher highs. So really looking at the higher time frame would help to stay in the overall trending, movement of the market. Even when we got this sell here and the market kind of dropped a couple points, not a couple, let's be accurate here. Woo, 30 points. Jeez, but even with it dropping at that point, if you would have used your cross all the way from down here, that wouldn't have, phased you. Really, you would have still kind of been in the market here. You wouldn't have gotten that cross till about that point. This is where, we would have used our market structure, secured our trades, kind of, moved our stop into profit. And then the market would have kept on making, higher highs. So you could have grabbed if you're on a higher time frame, that means, you're letting this baby ride. If you're taking your trades from that point. If you're just looking at the higher time frame when we're doing our top-down analysis to help us gain trend momentum, those crosses really help us as well. We're typically used to seeing, or using the 50 or 200, EMAs, those longer term crosses there to help us to identify the trend, which is great. Because if you're especially when the market is kind of consolidating, or being really wicky and it confuses you, you can use that as your guide. How do you stop into profit? Okay, so meaning your stop into profit. So let's see if I can, let's just use the same chart. Sorry. Okay, so let's just say we got into the trade at this point. We got our cross. So then, the market, once you get that cross, it's going to be, these candles up here. So let's just say we entered here. We got our cross signal. We're going to move our stop below the previous low. Remember, we're on the hourly time frame. So that means we're giving the market a lot of room to breathe. And we would have just kept, and we kept moving our target. But now stop into profit. So right now in this example, your stop loss would have been at 38.64. But let's say once we would have gotten to this point at 39.86, we could move our stop loss up to, right here, meaning that that we are in profit. We've locked our profits in at 39.66. If the market goes below that level, we are out of the market. Our trade closes in profit at this level. So you're locked in. You secured your trade, and you secured all this profit. So you move where you would have your stop loss at into profit. So that's what I mean by stop into profit. All righty. Bridget says, can we add a higher time frame EMA, a 200, 400, or 800 to see the trend, to help with buys versus the sells, and maybe take buys when it is above and sells when it is below, but use your EMA cross to enter? Definitely. And that's what we do here. But just I'm taking it just with slow little chunks here, because I definitely have on our higher time frames the 10, 20, 50, 200, 800, just so that, on different time frames, I can see how the market reacts, or, may potentially react to those EMAs. Help me stay on this trend. You got it, girl. Definitely. Okay, how are we feeling about our crosses so far? Can we add another element? Or do we have some more questions? If we're good to go, put go in the chat. If we have some more questions, drop it. Let me make sure we are on task. All right. Of course, Kelly's on go. Awesome. Okay, so the next element within our trading, let's go ahead and clear. Let me take this out here. So you guys just know how to use your EMA crosses by themselves without any other indicators. So the next indicator that I use is just your standard RSI. So let's go over here to our indicators. Let's type in RSI. I just use the stochastic RSI here. And this is typically how we see our stochastic. So our stochastic, let's see here. Where are we at? Perfect. Alrighty, so our stochastic, so we know that the market likes to, while it makes its waves from low to high, it comes back mid-range, makes higher highs and higher lows when we're in a trending market. Our RSI helps us to identify the kind of, I don't want to say if we should buy or we should sell, but the overall movement in the market. So once the market is overbought, kind of gives us an indication. When we're in this overbought area here, we're typically looking for a cross for the market to sell back down. It likes to sit at this base, at this mid-range. And then typically price is going to come down here. Now we're overbought. It's going to cross back up to this level. So this isn't a buying or selling indicator, as we can see. So let's just look at this example. So right here, we were overbought. We finally got our cross here. We are in an overall buying momentum. Remember, our 10-20 cross is here. Price is still above that 10 and 20 moving average, but we got a red candle here. We're overbought and now we're selling. This doesn't mean that we're going to go into a sell now, but it can just give us an indication that we may be pulling back a little bit before continuing into, that buying momentum. So what did it do? And it did exactly that. Price was at 40.56. We got our EMA cross. It sold down here to this level. Then finally, we got the cross saying that we were oversold, about to cross up to continue in that buy. And so price came down. How many points here? 12 points before continuing, with this buy. And so even though you get like sell crosses here, that doesn't mean that you're going to see a major dip in the sell. Sometimes we have, it just may be something minor. Does it mean that, even if, and that's really important, because when I was first learning about RSI, I just, thought that meant that there was just going to be like major sells or major buys. But a lot of times we could just have price kind of just making slightly lower lows before those highs. So never get confused, especially when we're at oversold and like support and resistance levels with our pivotal zones. So this is why I'm really just breaking it down point by point so that you can see exactly how to basically combine all of these and to flow while you're trading and just looking at it all at once. When we're looking at it at a higher time frame, sometimes Too much information makes us confused, but it all just flows together. Every one of these indicators on our charts have a different job. It gives us certain information and we're using it in a certain way. So, anyways, like I said, okay, even though we're oversold here, crossing up, that doesn't necessarily mean we're doing major moves, such as this. It could just be bouncing in consolidation. It could just be telling us that, we're no longer we're not really making higher highs and higher lows right now. We're just kind of, and again, so we've identified how we can tell, or when we know, like, the market's really ranging, consolidating, just like an indication that we need to stay out of the market with our EMA cross. So remember, when they're not like out giving us like this nice width in between them, spaced out, and they're kind of crunched up like this here, that is our indication. A, there may be a cross. B, there may be consolidation. So we can see how to spot that, with our EMAs. Also, with your RSI, whenever you kind of see the market kind of just doing multiple crosses and we don't have like clear, we want to see the market kind of oversold, crossing down, nice clear signs, overbought, crossing down, oversold, crossing up. We don't really want, too much mix here. But then when we get, into the market kind of crossing mid-range, multiple crosses, that of course is another indication, hey, the market's not making up its mind. We're kind of consolidating. If you're not already in a trade, this may not be the best area to get in, because you get in for a buy, next candle sells, you get in for a sell, it doesn't sell, we come back in here to a buy. So you want to wait for nice clear moves in the market, clear candles and things of that sort. So that's how our RSI can help us. Now, typically, we are used to seeing our RSI like this with the crosses. Someone from another IM, well, was she an educator? She was on Lee's team, but, well, was she really? Coach Michelle, someone from her team kind of showed me how to get these, my RSI nice and cute here. So showed me how to do the style inputs. And I really like that, because a lot of times when you see these crosses, they get kind of confusing. You're like, wait, is it going into a buy? Wait, is it going into a sell? So I use the same inputs, default inputs that are on TradingView, but I go over here to the style, and instead of putting lines, I have them as area. And so now you can see those crosses a lot clearer. So remember, we were over bought, kind of crossing up, oversold, crossing up into this buy. We saw this cross here, but now when you see kind of the different color coming up or down, those waves, shout out to Lee, she kind of called them her waves. She had different setup here with different, I guess, EMAs and different time frames and stuff. So she has like custom indicators, like totally different. But this is way before, got in with the big boss. So just a simple EMA cross here and using the area. I kind of try to keep the same colors because I already have so many colors on my chart. So you're able to use whatever works for you. Kind of try to stick with the same, what did I have? I kind of just use the blue and the yellow, kind of trying to sticking with this kind of blue, but it doesn't really show the exact on, I don't know, it looks a little off to me. So I just stick with just a regular, just blue color, but it's completely up to you. Snow on the mountain. Yes, that's what she used to call it, snow on the mountain. And then I think she changed it to like waves or something like that. Really fun, really cool, but nothing new with your RSI there. Again, something that's been around for a long time. It's a lagging indicator. It just helps to tell you when the market is overbought or oversold and within that time frame. just to let you know that, the market is going to try to, come back to this medium ground. So when price is oversold, even though it can continue to still buy. So for instance, like right here, this is where we would have gotten this cross on the 15 minute. And we would have gotten it, around, this candle here. That is our indicator that price is no longer selling, no longer, we're overbought, we're crossing up now. If you were not in this buy, if you didn't catch this cross, to enter the market into this buy, this is just telling you, okay, EMA still tell us that we should be looking for buys. Right now wouldn't have been, at this point when the market is, in this overbought area. That's not a great time to get into the market for, buys, because there's a potential that we're going to cross down, come back and just get, a better entry. Doesn't tell us how much, how far down, we may cross or go into a sell, but it'll just help you get back into your buys or your sells with a little bit more, accuracy. So of course, we will wait for this cross here. Once we saw price kind of, coming back up here, we got a little bit more, color there for that cross. We see that this is where we, use our candlesticks. We see we have a flat bottom coming in, green candle. That would be a good indication. Okay, hey, let me get back into this long here. I'm going to set my stop loss a little bit below this previous low, because if price, continues to make a lower low, just rather be out. You might look to the left to see, okay, you never want to place your stop loss exactly at these points, exactly at the previous low. Give it some room. I kind of, took it over here to look at this previous, liquidity area that we had at 4,005.6. Just moved it a little bit below that area. Still not risking, only risking 6 points. So that's, that would be a good entry. That's how you would re-enter, the market. And if you're going in for a set profit target, cool. If you're kind of looking at just staying in the market until you get another cross, and once your trade goes into profit 5 points or 10 points, whatever you're seeing, or if you're using your candlesticks, okay, you have a new 15-minute candle come in, you're going to move your stop into profit. So again, if you entered at 40.11, price is at 40.20, you want to at least move your stop maybe to, below this candle at 40.15, so that you at least are locking in 5 points of profit. If the market comes back and sells, you're not completely wiped out. At least you locked in 5 points. And you want to do that if at any point, if you're feeling confident, or if you're going to sleep, you never know. Headline news is coming out. Lock every 5 or 10 points. Keep moving your stop up so you don't want to move it too close into profit, so that, you're wicked out of a trade or anything like that. So you really want to use maybe like your higher candlesticks, and maybe not looking at the 5-minute, maybe even looking at the hourly. So you look at the different time frames, you see which time frame is giving you more structure, and you can adjust your trades accordingly. Okay. So again, your candlesticks help you. Your RSI help us to identify if there may be a pullback, if we're having like good re-entry levels. So again, if I had a trade analysis at this point, and I'm like, all right, you guys, I'm looking for something like this. Boom. I'm looking to get into the market. Once we get a nice cross up here, we got our cross. I'm just going to go and take, 20 points or 30 points. And you come into the market. Okay. Maybe say I, sent out this idea, just telling you guys what's going on for me at 2:15. Let's say you come in, you don't see this until 3:15. You're like, dang, is this still a relevant trade idea for me? So you go through your own, analysis, making sure that you still, The market is still making higher highs, higher lows. You still are on the right side of the cross. We didn't have, a conflicting cross there. And then, just with this information, just with our crosses and our RSI, that's when you can then look to wait for a buying cross signal to re-enter the market. So if you're just right here and you're like, oh, should I get in here with this sell? Or, I mean, should I get in here? The market's, we have this selling candle here, probably not the best place for me to enter this buy. That's when you then wait for a little bit of confirmation from your RSI for that cross. When would we have gotten that? Probably around, this level here. So again, if you were just using your candlesticks, you would wait for, that break, but you get the confirmation from your RSI. So now, no, you weren't able to get in at, 400 for 40.01. And instead, your entry, is at this point here at 40.05. Maybe, and then, with that, we look again. So this was our entry here, the original entry. We had a little stop loss. Now you adjust your stop given the information that you have and what's, confident or comfortable for your trading style. So with gold, we at least want to give that baby 5 points. If we have, the wiggle room, we can give it 10, but never exceeding that. So if we can, move our stop, we just want to make sure that we're just reducing our risk as much as we can. All righty, how are we feeling, guys? I know I've had you guys here for 40 minutes, but so far, I feel like we're doing pretty good. You guys, give me some feedback. How are we feeling right now? Because we're going to go on to our pivotal zones. But I want to make sure that we have this on lock. Of course, Kelly's great. That's my boo. She's awesome. You guys, shout out, send some, positive vibes and things to Kelly's son. He's learning how to trade. That's amazing. We always want our guys, our littles and our friends and families to get into trading. So I absolutely love to hear that. Remember, we do have our boot camp coming up in November. We'll have 2 other traders come in. More information is coming out. I think I'm going to drop that tomorrow. I just want to solidify some of the details. But we have our wonderful coach Courtney, who is a psychologist. And that's her major there. But she's doing trading psychology. She'll have a course that she's going to be teaching every evening. We'll have Coach Micah coming in with his Forex knowledge during the day. And then, me, I'll just, have a couple different classes during the day where we're just all getting into the markets and practicing this in live time. Y'all know it. It's going to be amazing. It's going to be fun. It's going to be our last little thing before the end of the year. So if this, I've been doing this free for you guys, have these classes that anyone can join. You can, look it over throughout the week. Been doing this for almost 2 years now. So if this isn't enough, some people need really like hands-on knowledge and want to get in depth and ask questions in live time. Of course, we're going to be, on our Zooms and things like that. So it gives a lot more freedom. You can share your charts. If you need some more hands-on, that's definitely the place to be. So look out for that information in the Telegram. Okay, so where were we? Awesome. Yes. Hands on, yeah. We have our trading. I know I sent it late, but we do have our in-person meetup here in a couple of weeks. I know, last minute, I do apologize, but if you're in the Atlanta area, come on through. That's going to be even more hands-on knowledge and, just focusing on live trading. And we're all in the same room, getting in and out of the trades, helping you, with your entries and your exits and doing that all day, just trading all day, having fun, going to dinner, chilling. So It's all good. It was last minute, but I promised. So even if one or two people come, I'm here. I'm gonna be trading. I got my room, so it's gonna be awesome. I'm doing it anyways, right? I know. My sister's like, girl, you need to be dropping this 4 or 5 months. And I'm like, I don't even know what I'm doing in 4 or 5 months. I just got back, from North Carolina. That was so fun. So just being a little bit more organized, but trying to be here for my folks. But I know for sure the boot camp is going to be something because it's virtual that everyone that wants to attend or needs some additional knowledge can attend. Okay. Where am I? It's all good, Bridget. The market is always here. And then plus, that is probably, even though it's fun and you make your, typically, I try to structure the classes where, because we're focusing on live trading and in and out the markets, you would typically make those fees back. Not a guarantee, but a lot of the people that I spoke to, shout out to Nida and things like that, that's really the focus. But if you're already good in the market, these, weekly sessions are good for you. Great. So let's see. Okay, so where were we? Alrighty, so we have our EMA cross, our RSI. Next thing is our pivotal zones. So there are different types of pivotal indicators. I use, if you type in pivotal, Diego del Celio, I use his indicator here. You have a bunch of different indicators. For instance, let's just go to, pivotal zone type of indicators. So for instance, in Top Step, if you use their indicator and their pivots, I thought they did have a pivotal thing. Let me see here. I'm not sure. Maybe that might have been Trade Station. Okay, never mind. Oh, they don't have a pivotal one. Okay, so sorry. But let's just see. There's different type of pivotal or pivots that you can use. They all have different, some people use like the golden pivots. So I'm just going to throw a couple of them up on our charts. The pivot zones that I use are closest to what was on IM Academy, which is how I first, was introduced to them. Learning with someone on the London session. Who is that guy's name? Oh God. It was the indicator. He was on for the London session, but he used pivotal zones. And that's when I first, started, my first introduction to them. And then of course, with Lee, the lovely Lee, she got into depth with that, with, Professor Keisha and Courtney and everyone. So learned to, learned about that as well. But anyways, it was a little adjustment because there's different type of pivots, different people, different indicators are structured a little differently. So let's just look at one of them here. So this is, forget which one we had here. Their pivotal zones go on your screen a little differently. So I don't use that. I can't even tell you, what this is. Obviously, it is the zones here. 50, 61, 8, but they're structured a little differently and pre-placed on the charts here. So let's go ahead and delete that bad boy. This is the pivotal points. I think this is the one with, forget. So these are little dots and this also kind of uses like a Bollinger Band kind of thing here. Some other pivotal points have something that just has lines that say like R1, S0, R0, and just kind of just telling you where the major levels of support and resistance are. This kind of pivotal indicator kind of reminds me of, those SARs, if you guys know. Well, and we'll be going over a bunch of different indicators too, in the boot camp. So in addition to live sessions, y'all know how I did it the last time. We had like live sessions during, um, the times where the market was moving. And then we had structured lessons every day as well. So one day we would just be going class just strictly on Fibonacci, another class just strictly on different indicators and adding them to your charts, in addition to the RSI if you want that knowledge. We had a class on finding key levels and structures and things like that. So very in depth, very hands on. And I like to do it in the live market session so we can see it, because in theory, I drop all that knowledge from all different sources all throughout the week. If you want to know about pivotal zones, we can read up on that all day. We can watch a video all day, but I know what helped me was now seeing that in live time while we're trading. So I do like the boot camps, because we can see that in live time. And no, it's not just going to be futures. We'll be going over Forex. Micah's going to be doing his whole spiel with that. So that's going to be amazing. We'll be looking at futures too. So it's for everybody. Every single body. Okay, so alrighty. So kind of went over those pivots, show you why I kind of just like this one here, which is our pivotal zones. Okay, so let's go over here to our settings. Let's click our little settings bar. Okay. So you can have how it originally comes is with these lines. And so these lines, let's just go over settings real quick. These lines here, you can have them on your chart kind of similar to the other ones, the other, indicators that we saw there. So it kind of lets you know this is I have too many colors and things on my chart right now as it is. But when I was first learning, that definitely helped me, these lines, because you just see how the market reacts, and it helps you also to, adjust your stop loss. So for instance, if you had your, RSI, your MAs here, and you're moving your stop into profit, you can clearly see, okay, if you're just, trying to grab that, let me move my stop. I'm seeing support here at the R7 at 40.51. That's where that's where my support is. If the market breaks below this level, I no longer want to be in this trade. I want to continue. If I was in this buy, I want to be out. I want my profits nice and secured. And then I'll be looking for the next move. Perfect. Oh, Bridget, I just love it. Who's John? Who is John? What did I miss? Hey, John. Okay, so let's talk about pivotal zones really quickly. And I know it's 9:13. We've been here for 52 minutes. Oh, the nighttime pivots guide. There we go. Oh, you got a memory. I need you. You got a good memory. Yes, ma'am. That's who it was. That definitely sounds familiar. But that's when I was, doing the Asian breakout, during that time. So that kind of sounds familiar. I know there was like a wife and a husband too. There was a lot going on. But anyways, good times, good times. Learned a lot. Okay, so let's talk about pivots. So with your pivotal zones here, you have a bunch of different lines. You have your S0, your S0, -1, -2, -3. Then you have your R8, +1, +2, +3. So let's break these down. Okay, so from your R8 all the way to your R3, in this level, this is going to be your resistance area. Okay, and I'm going to make this box red, just to give us a visual of basically when price comes into this area, we are expecting a sell. This is resistance. It typically, now, because Gold has just been making higher highs. We cannot really go back to, the higher time frames or looking to the left to give us some information, but typically you're going to these pivotal zones are based on support and resistance. They're based on market structure, and once you kind of look to the left of your chart, you can see kind of clearly, why this area was resistance. You can see kind of the where it was resistance in the past and things of that sort. um but what I like about the pivotal zones is because when you are making higher highs and you don't have historical data to kind of help you map out, your key levels, if you are trading Forex and you do not have, your volume or, access to, like, orders coming in and things of that sort, pivotal zones really help with that. Okay, so back to gold. Alrighty, so here we go. So once price touches kind of this R8, we're expecting to see a little bit of resistance or a little bit of a pullback. And the higher that price goes into these pivotal zones, so once it hits the +1, +2, +3, the higher probability that there's going to be some sort of a resistance there at that level gets higher and higher. Now, of course, price can push through these levels, never respect these zones, and just continue to buy. That's when we would get a pivotal shift, what they call a shift, where now this was the R8 in an area of resistance, and this may, become the P4 or the R6, and now you have a new level of resistance here. What does that mean? That means that the market has broken structure. Where there was a resistance level or a high, we have made a new higher high. And now we may pull back, but not necessarily pull back. The market's just going to keep in that trend. So, you take these zones with a grain of salt, because of course we can blow straight through them. That's where our RSI comes into play. So, and for instance, like right now, we are near the R8. We would really love to see kind of us being oversold, overbought. Sorry. I know people be so sick of me with that. It's like intrusive thoughts. It's like my brain wants to say oversold or overbought, and then my brain is telling me, no, say the opposite. So I know I'll be confusing you guys. Just pay attention. Pay attention and you'll know exactly what I'm talking about. Look at the charts, not my words. Okay, so we would want to be, once we get to like this R8, this kind of resistance level, R +1, we will want to see our RSI kind of looking like this in an overbought area. We will want to see it kind of crossing down to give us that indication that we may have a potential pullback before a continuation of that buy trend. We know gold has not been doing this, right? So we wouldn't really be expecting that at this point, but that's when you can have a great confirmation that, okay, let me go ahead and get out of this trade. If you entered, okay, we'll talk about that next. Okay, but you would always use, your market structure. So within that, we would already see that we had, sorry guys, I know I'm moving around a lot here. Okay. We would already see that we had, some resistance here. This was our high. We would have already seen, even without, let's without our pivotal zones, without our RSI, without our, let's clean this up. Let's take this out. Let's just go pure market structure. Without any of that, we would, already know that, okay, this is a support area. That's our high area. This is a decision. This is a key level decision area in the market, where the market is just, bouncing between this support level and this resistance level. Right now, even though we are near this resistance area, and we've seen, price kind of telling us that the buyers are unable to make higher highs. We were in this buy here. We would have definitely, moved our stop below this 40-50 kind of level. We definitely, if the market breaks below these points, we do not want to still be in for that buy. Right now, though, let's see. Our EMA cross, we had a little cross here, but we didn't, it bounced right back up here, right? Our RSI is giving us some buying momentum from here, gave us selling momentum. Now we're back with buying momentum. So right now we're just waiting for price to either break above this high, see if there's a pivotal shift. We can go ahead and put, our alerts here. We can set another alert below this level just to let us know. And we will come back to the market at this time to see, okay, what should we be doing? What type of trade are we going to be, taking from now on? Now that we've reached this level and we have conflicting information. Now, if the market was up here and we were overbought, that's when we would set up something like this. And we're like, okay, cool. We're going to go into a little pullback. We're coming back into, the New York Open. So we may be looking at something like this, taking a short once price, reaches this level, comes below this level, maybe taking a short down here to, and let's talk about our levels here, our P4. Okay, I'm sorry. Getting way too ahead of myself here. Give me 1 second. Let's disregard this. Pivotal zones is something I'm going to try to give it to you in 5 minutes, but it's a little bit more in depth than that. But let's try it. Okay, so same thing. Just that we had this resistance here. So from this S0 down to this -3, this is now our support area. This is where we would really be looking for price. If we're in a buy, we'll be looking to enter the market here. Let me go ahead and change this level. Okay. All righty. So in theory, and again, same thing with the support level. The lower it goes, the deeper it goes into the -2, -1, -3, that is, there's a greater chance that we'll have some sort of, reversal there because it's a major resistance level on the 15-minute. And then again, if you check out your RSI here, if we're down here by the S0, we want to kind of be looking for the RSI to be giving us this type of being oversold, buying up. Got it. Buying up here. So if we were at the S0 level of prices here, we would really want to see our RSI looking like this. That would give us a good, feeling here that price is going to be setting up for that buy. We would then look for, our candle for confirmation, make sure that, we get that our, MAs are kind of giving us that signal or about to cross, if not. And that's how we would, typically use this in if the market is in a great, trend level. So, for instance, we would have liked for, now I don't know if the market was at these levels here. We would need to go back. This was maybe like a P4, PR8 level, and we had a shift there. So just a couple things to notate with your pivotal zones. Pivotal shifts. If price breaks above these levels, you're going to see these pivot zones then shift to different price areas. That means that there was a break in structure. And so now we're going to continue with that trend. We will not have a pullback. So let's look at the other areas of your pivotal zone. So the P4. So once we get into, okay, we are in a buy trend. Once we see price come up here to this R8 level and pull back, it is not guaranteed that price is going to come right back down to this S0. Typically, price is going to come to this P4 level, which is a pivotal, like our reversal level. So remember, if we're in a buy trend, and this is going to make sense with market structure, because if we're in a buy trend and we made a, here's our entry low, higher high, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And now you have a low here. If we're unable to make a higher high and continue with that trend, coming all the way down here to the S0, if there was no news or support, that may be highly unlikely, because now we're not making, consistent higher highs and higher lows. We may just see price come down here to this P4 level. And then from there, continue to make those higher highs and higher lows if we're continuing with the trend. So there's a couple different, so you have to, once price reaches there, don't always think that it's going to come down here to this S0. You have to look at the overall trend of the market. You may even want to pull out your handy dandy pivotal Fibonacci retracement tools, which we'll go over. I don't want to give you guys too much information, but from that low to that high, we see our 50, 61, 8 is just around in this region by our P4. That was a breakout level. So, those pivotal zones, they help you to spot kind of a retracement, helps you to see where support and resistance are. If you were looking for a buy, and so again, we're talking about once you come to the market, so for instance, right now we're in the 15-minute. When we were talking here, we started class at 8, let's see, about 8, around 8:15, price was at 40.66. This is where you would have set your alerts here. You could then set an alert here at the S0 so that, if you were in the trade, once price hit this S0 here and you set up your buy, because remember, we're still in longs, you would have set up your buy here, your take profit. If you, didn't just want to hold on to your trade without your cross there, if you just wanted to take it up to the R7 or the R8, remember, I know this is gold, so gold YM, which is the Dow, they really like that R8 level. However, if you're trading ES, sometimes ES doesn't come up here to this R8 level. Its support and resistance levels are like the R7 and the S1. So do your back testing, know your pair and how it typically reacts to these pivotal zones. Anyway, you could have gotten in here. You would have set your stop loss either, a little bit below this previous level of support, or even just using your, pivotal zones, making sure you're not risking too much. You have your take profit at the R8. You can, so you set your target, and that's 67 pips here from this cross, from where you got your R8. So there's a bunch of different entry levels here. Entry zones here. You could have entered at this cross. You could have entered which was just right around where, the S0 level is. Price just continued to make higher highs. Once price got up to here to 40.10, we had a pullback to the entry. No big deal. We had another cross here. Once price broke above this resistance level. So we see that it had a hard time. Let's just bring this across. Buyers had a hard time going back above 40.10 here. Once the buyers did break above that area, made higher highs, kind of came back down here to this low, this would have been your indication we're making higher highs now. This was a low, this was a high. Now this right here is our next, low here. So you could have moved your stop into profit once, we saw a new higher high and a break. And as we can see, price never came back to this level. You can go to sleep, nice and soundly, knowing that even if, price comes back down and sells, you still locked in your profit. You still have, if we, you still 10, 15 points there. So you're good in profit here. You would have gotten your alert when price hit that R8 and boom. So these are levels that before you go to sleep, you take a look, set your alerts here at the S0, set